Welcome to Talk Tickers, your shortcut to being well-informed on the latest earnings calls. Today, we're diving deep into Progress Software's second fiscal quarter 2025 results and, their strategic moves. Our mission to pull out the most important nuggets of knowledge from their recent conference call so you understand not just what happened, but why it truly matters.
Exactly. We're going to break down their key financial numbers, what the leadership is saying about the future, and, how they're planning to stay competitive in today's fast-moving market. Think of it as kind of peeling back the layers to understand their real game plan.
Okay, let's unpack this then. Starting with a snapshot of Progress Software's Q2 2025 performance. The company didn't just hit their numbers, they crushed them, really, signaled a powerful underlying strategy and actually raising expectations for the rest of the year. Their total revenue soared to $237 million. That's, wow, an impressive 36% jump year over year.
Yeah, and what's really compelling here is how they're building for the future. Their annual recurring revenue, ARR, that skyrocketed 46% year over year to $838 million. Now, if we look at it on a pro forma basis, which basically adjusts the numbers like acquisitions were there all along last year, it gives us a clearer view, right? Apples to apples performance, that growth was a solid 2%. Tells us the organic growth is steady, even as they add this new revenue from acquisitions.
That's a great distinction. And beyond just the top line growth, their operational efficiency seems like a real standout, doesn't it?
Absolutely. I mean, their operating margin reached a really robust 40%. That's up from 38% same quarter last year. And their earnings per share, EPS, came in at $1.40. That was like 6 cents above the high end of their own guidance. This isn't just good. It points to incredibly disciplined execution and really meticulous expense control. That's kind of a hallmark of this company.
Okay, so with those strong financials as a foundation, let's peel back the layers. What truly drove these numbers? And what about the strategic plays Progress is making? Management really highlighted two big themes: the ongoing success of their Sharefile integration and a significant new acquisition that kind of caught my eye.
You're talking about Nuclear, the acquisition for $20 million. Yeah, while it's, relatively modest in dollar terms, it's a strategically potent investment for their product portfolio. Nuclear offers this easy-to-use self-service SaaS product that democratizes verifiable generative AI, specifically focusing on Agentec RAG AI capabilities for businesses of all sizes.
Okay, Agentec RAG AI, that sounds like a mouthful. Can you break that down for us a bit? What makes Nuclear so special, especially since, Progress usually goes after more established players, right?
Great question. So think of Agentec as the AI having more, let's say, autonomy, problem-solving ability, almost like it can take initiative. And RAG, retrieval augmented generation, that means it pulls information from trusted, verified sources before it generates an answer. So it's about making AI not just creative, but reliably accurate and trustworthy for businesses, which is absolutely crucial in an enterprise setting, This acquisition, it aligns with Progress's long history of investing in innovation, keeping their portfolio fresh, keeping customers engaged. They see AI as this, third major wave in enterprise software, potentially even more transformative than the internet or mobile computing itself. Nuclear's tech is designed to integrate across their whole portfolio, OpenEdge, Sitefinity, Sharefile, bringing valuable AI there, and maybe most importantly, helping their existing customers speed up their own Gen AI stuff.
Gotcha. And speaking of Sharefile, the integration update sounds incredibly positive. What were the real operational hurdles they cleared there? And are there any lingering challenges even with that transition services agreement ending early?
Honestly, the integration seems to have been remarkably smooth. Progress reported being ahead of schedule. Most primary operational synergies are complete. And that transition services agreement, the TSA, which often takes ages, right, terminated earlier than planned. Sharefile is seeing strong renewals, expansions, and they've already rolled out powerful new AI features like document collection that's up to 3.5 times quicker, and insight extraction that's 25 times faster, plus deep integration with Microsoft 365. And Gartner called them a visionary for document management. Those are big endorsements.
That really is a testament to their execution. Okay, So we've seen the strategic moves shaping the future. But what about the foundation? Are there established core products, still pulling their weight in this dynamic market?
Oh, they absolutely are. Progress saw consistent performance across the board, significant momentum from OpenEdge, continued solid contributions from Sharefile too. The growing importance of data in this AI-driven world, that's a key driver. They shared this fascinating anecdote. A global pharmaceutical company saw their Gen AI answer accuracy jump dramatically from 44% to 84% just by implementing Progress's advanced RAG search with semantic knowledge graphs. It really highlights how their tech is solving real-world complex problems.
And this next point is really telling, I think. It's not just about what Progress sells, it's about how they operate. Are they, for instance, using AI internally to drive their own efficiency?
They are, yeah. And it's a brilliant move, really. Their commitment to expense discipline, that's like central to how they operate. It's being reinforced by their internal AI adoption. It's almost like they've given every department an AI assistant to find efficiencies. Engineering using AI-assisted coding for faster development. IT using predictive analytics for infrastructure. Marketing, sales. Leveraging generative AI for content creation, nurturing prospects. This focus on internal efficiency is a major factor in keeping those world-class operating margins. They're practicing what they preach.
Makes total sense. Let's quickly touch on the balance sheet then and how they're allocating capital. What's the big picture there?
Okay, so they ended the quarter with $102 million in cash, $1.47 billion in total debt. Importantly, they repaid $40 million on the revolving credit line in Q2. That brings their first half total debt repayment to $70 million. So they're right on schedule to pay down the $160 million they targeted for the full fiscal year. They also repurchased $20 million of Progress stock in Q2, which, signals confidence. You might notice, though, a slight increase in days sales outstanding DSO. That's basically how long it takes them to collect money owed.
Yeah, I saw that. Anything to worry about there?
Nah, the company clarified it. It was a direct result of successfully transitioning the Sharefile business onto Progress's own billing system. That was a huge operational milestone, so this temporary bump. Expected to resolve quickly as they optimize the new system. It's actually more about a big process change than a worrying trend. More like a sign of integration progress, ironically.
Okay, that makes sense. So pulling it all together, what does this mean for you, the listener, especially if you're tracking companies that are good at acquisitions and running efficiently? What are the key takeaways from this deep dive into Progress software?
Well, it really reinforces their strategic pillars, doesn't it?
Yeah.
Management reiterated their total growth strategy. Two core components there. First, investing and innovating in their existing product portfolio. Nuclear is a perfect example. Second, disciplined, accretive M&A. Accretive just meaning acquisitions that immediately add to their earnings per share, not dilute it. And that success with Sharefile, it's kind of given them the in-house chops to evaluate almost any type of business, now SaaS or otherwise, as a potential target. So it broadens their M&A funnel significantly, but crucially, they're maintaining that strict discipline on price and target profile. They want strong customer bases, recurring revenues, high retention, and their increased full-year guidance. Across the board revenue, operating margin, free cash flow, that reflects continued confidence. Confidence in market demand and their team's execution. And that 100% net retention rate across their whole portfolio, that just highlights the resilience, the stickiness of their offerings. Customers aren't leaving. This is really a company focused on long-term value creation. Both organic and inorganic growth, all underpinned by that operational efficiency and a strong commitment to customers. It's a robust engine.
Yeah, and you mentioned the recognition for their CEO and their workplace culture too. That signals strong leadership, a stable foundation you can build on for years.
Definitely.
All right, it's time for our This Is Not Financial Advice segment, where we pitch an outrageous but plausible trade idea based on what we've just unpacked. What's your big idea today?
Okay, my pick is consider going long Progress software, PRGS. But here's the twist, the reason. You're betting on the boring excellence, that disciplined software consolidator approach in an AI-hyped market. While everyone else is chasing the next pure play Gen AI moonshot, Progress is just methodically integrating AI where it makes practical sense. In their products, Nuclear, Teleris, Kendo UI, Sharefile, and crucially, internally across their operations for efficiency.
Boring excellence.
It's exactly the successful ahead of schedule integration of Sharefile, and even that transition to their billing system, despite the temporary DSO blip, it demonstrates a really strong integration playbook. It suggests Progress is building this highly efficient, high-margin SaaS machine, capable of acquiring and integrating diverse software assets, unlocking value where others might stumble. That $20 million Nuclear acquisition, it was a shrewd, low-cost way to inject cutting-edge AI capabilities into a high-retention customer base. It wasn't some speculative bet. This is a solid, cash-generative business focused on incremental, accretive value. Makes it a compelling, albeit maybe less flashy, long-term play. It's kind of the tortoise in the AI race, right? And often the tortoise wins.
So betting on methodical execution and proven integration over flashy promises. I gotta say, I like the sound of that. Okay, that wraps up our deep dive into Progress Software's Q2 2025 earnings. We've covered their impressive financial performance, the strategic acquisition of Nuclear, that ahead of schedule Sharefile integration, and their really disciplined approach to growth, both internally and externally.
Yeah, their confidence in the outlook for the rest of 2025 and beyond seems pretty well positioned, driven by resilient demand and that strong operational execution. It's really becoming a competitive advantage for them.
Right. And just a reminder for everyone listening, this deep dive provides information for your consideration. It's definitely not investment advice. We always encourage you to do your own research. Thank you for joining us on Talk Tickers. And as you process all this, maybe consider what other boring excellence companies might be out there, just quietly building long-term value while the spotlight is somewhere else. Something to ponder.